Welcome guys, Labs here, and today is kind of a different video. In today's video, I'm going to go over a few trades that you could have taken in this June-July range. It's more like a backtest recap video, and I just wanna explain like how you could have taken those trades, and in the end, I just wanna like recap how much money you could have made or lost. But yeah, it's more like an education video. I basically wanted to do this for myself because I've missed a few trades. And I've basically shared every trade on my X as well. And this video is kind of like a backtest session where I'm going over the trades that I missed, and I hope you guys can learn something as well. So let's dive straight into it. Like basically, at the beginning of June, we swept like this 59K low, but here I haven't like I didn't really look for any trades, so it kind of started. Wait, let me just refresh everything. Everything kind of started around here. Basically, like, there wasn't a trade, but if you go back to my X, I was talking about this range POC on my profile. Damn, what's going on here? Yes. I was talking about this range POC on my profile that I'm looking like for a test of this and continuation. However, if we go on the low time frame, there wasn't really an entry. And we can see, wait, it was kind of stupid that I removed it. But yeah, basically you guys can see that we're perfectly rejected from it. And I was waiting like for a Wyckoff model. I think it was valid because if the POC was around here, like around here, there wasn't really an entry. As you guys can see, we have just been staking bicycle liquidity and there wasn't really a trade. You technically could have entered around here, although it wasn't great. Like you had your demand here, it was quite aggressive, the expansion to the upside, and I wasn't like too confident to be honest, if I'm being real with you guys. I was kind of hoping for a clean distribution, but as you guys can see, we all had this demand as well. But here we hit like our POI where we're looking for shorts, and technically here, like I didn't take any shots around here, but now looking back at it, we kind of had a trade around here where we swept our extreme liquidity. And well, let's do it like this. And after bouncing from our demand, we can kind of apply our Wyckoff rules. So we had a low time frame Wyckoff. Um, Basically we test the demand. Here our refined demand, and instead of really accumulating, price has just started to create higher lows and higher lows, like stacking sales of liquidity. So this wasn't really a strong reaction. I was kind of I was hoping for this high to get taken, but again, in these markets you can't really hope. Like you have to trade what you get, and the trade that would have been valid to take after the based on the smart money concepts was around here. We also had this supply creation that we actually tested later, but the trade was basically here. It wasn't the cleanest, to be honest. Wait, why is it so slow? No. Man, I don't know why it's keep resetting, but great video, guys. Great video. Okay, nice. So as you guys know, market structure is king. So if we follow our structure on the mid time frame, we're trending up. That's why I was mainly looking like for a move higher This was basically the expectation. Also the expectation of order flow. Mm, to put the move higher. However, we also got our internal structure, and that would be kind of like this. Let's do it. To be honest, I don't even care how it looks like. I just want to go over the important stuff. And then we had like our even more refined structure. And basically, to confirm this move to the upside, we have to break our low time frame structure back to bullish. So in case to confirm this, to confirm like this move to the upside here, we would have to break low time frame structure here, level 2 structure. But we didn't really get that, and we kind of got the opposite from it because, as you guys can see, we also trade demand and supply. And now after price has broken this low, you could have technically entered around here. Although it wasn't the cleanest, it was well to take. And basically, like we expect this low to get taken since we got a weak bounce from demand and got bearish price action um, around these highs. So I would personally like target the demand because I'm still expecting like higher levels to get hit. So that's basically trade number one that you could have taken. And now I want to go over the next trade that was around here. Let me just clean the chart up because it's kind of messy. So this is trade number one, 2%. Then here there wasn't really anything, like it was just chop. Yes, we SFP this low, but as you guys can see, like we didn't accumulate or anything. We've just been sticking sales liquidities, take the high again, and then yeah, we're down lower again. So there was no trade around here. And I'm not sure if no, actually I didn't trade this because it was like too low time frame, but nah, to be honest, I wouldn't really count it. Like I wasn't even looking at. Technically, there was a entry trigger, but not really based on smart money concepts. Like using order flow and kind of the data, you could see that we had a lot of buyers coming in around here compared to this low. So more people were buying at higher price levels. That's like, of course, indicating a push to the upside. But I was focusing on this lower refined structure demand, and because of that, I wasn't really looking to take this trade. But just based on SMC, I probably wouldn't have taken it. Although I actually made a post about it today, we tap like into this perfect inefficiency. Like price always likes to go for the inefficiency. You could call them FEGs, and that's basically what happened here. If I draw it correctly, let's do it like this. Boom. Yes. So basically we get our bounce from here, and funny enough, like this move to upside was really aggressive. I didn't really take this, but what happened here was simply that price was seeking for this bicycle liquidity at the highs, and since like you couldn't know it, like you couldn't have known it at the time, but basically market makers were already prepared to short the next move. That's why the supply was here. And as you guys can see, we perfectly rejected from the supply. It was kind of like uh, New York. Wait, yeah, New York has pushed price up, and then kind of like during New York, we've tapped into the supply. However, it wasn't an entry for me. Yes, hindsight, you could have limited it and just shorted, but it was like the most obvious trade, to be honest with you guys. I mean, I could find reasons how you could have taken it. However, as you guys know, like first of all, I hate hindsight trading. Like It's so stupid that people do it. But as you guys can see, I mean, even structure was pointing to the upside. Like we're making high highs, high lows, high highs, high lows. So we haven't broken any significant structure back to bullish. However, it wasn't really something where you would say, "Oh yeah, this is 100% manipulation." I'm not sure. Nah, it wasn't. Like there wasn't anything clean around here. So yeah, no trade for us. And I just wanna continue next. What happened here? Wait, if the chart's loading. So basically, wait, let's clean the chart a little up. Hope the video is not too boring for you guys. It's kind of, to be honest, it's more for myself because I just want to see how much money you could have made during this range, and just prove to you guys that SMC is working, and maybe you guys can learn the one other thing and apply it for yourself. So um, let's see. Why is it so? It's lagging too much. Wait, I'm just going to map out the POIs that I was looking at all my eggs. It was this one, and it was this one as well. Then we also had, was it this one? I think I gotta open my eggs because I really can't remember. Oh yeah, it was around here. Yeah, I remember there was a key level. It was on Saturday, right? No, Friday? Last year, Saturday. Wait, am I tripping? I gotta pull out my eggs. Wait, let me just look it up because I don't want to spread any BS. Hmm. But first of all, let's go back to this high. And wait, I kind of lost the. I forgot what I want to say. Okay, now I remember it again. As you guys know, when trading smart money concepts, supply and demand as well as market structure. I mean, mainly market structure is king. And if you know, there's like I already said, there's the primary structure and the internal structure. And in this case, we broke the internal structure, and this is kind of the first sign that we're going to rotate to this low, because as you guys can see, it's a naked low. Price has not accumulated around here, like we've just been staking more sales liquidity, and we all know that liquidity is a price magnet, so eventually we're going to take this low out. What I was also saying on my X, so you guys can check it out. But basically, after breaking this low, we are more or less expecting a rotation to this low. Again, it was kind of my fault. Man, I actually did like the same mistake around here. Like here we left all this bicep above, we did it as well. So I was kind of thinking there's like no way that we're going to do the same thing again. But that's obviously what price ended up doing. So after like kind of getting this pre-structure break, price has just been grinding higher, and we actually had this supply that I was looking at. Yeah, wait, I actually got this on my X. Um, I mean, usually like I don't care, but I also don't want to be like the hindsight trader around here. But let me just open. Yeah. So here's the post. I was basically looking for a short around here and a long around here. And my how I was looking at this range was like a pure phrase where this was our range. This was our manipulation, and this was our expansion phase. Like you can clearly see that this manipulation happened outside of this range, and we dumped back inside this range, confirming it. However, after we um, got like this expansion move, it wasn't really the classic blueprint pure freeze. So later I ended up kind of removing this pure free idea and was more looking at it from a volume profile trade, where you guys can see that I was looking for a deviation of the value area high and then kind of a rotation to the downside. But again, here I didn't really get an entry. Wait, let's draw it. Oh wait, let me just quickly explain how you can trade the volume profile, and it's quite simple. When you have such a big range, man, I don't know why it's so lame, but I hope it's not too bad for you guys. I don't want to redo this video. But basically how it works is that when we have this volume profile, you guys can see that most of the volume is centered all around the kind of in the middle of the range. And when we deviate one side of the range and then get below the POC, we're looking for, I mean, we don't have to retest the POC, but we are looking for a pullback and then a rotation to the other side of the volume profile, like in this case, the volume area low. And I kind of, yeah, I kind of messed it straight up, and I want to go over why. It was kind of stupid. If I draw the supply here, yeah, that was basically the trades. Hmm. Okay. I also want to go about this. Man, I'm jumping too much around. That's what I'm kind of noticing in these videos. Like, I'm getting lost sometimes, so excuse me, guys. I hope it's not too bad, but again, I was looking for a deviation of this value area high, and then reclaim like the get back inside the value area. But this move was like so aggressive. First of all, this supply wasn't the greatest. If we go on the lower time frame, let's drop lower. It wasn't really a clean inefficiency on the lower time frame, if I remember correctly. Yeah, there wasn't really anything. I mean, this was kind of the only thing you could have marked out, but like I had the direction of going lower. To be honest, it's not difficult because we know market structure broke bro- broke back to bearish, and then we've just been stacking higher lows, and that's liquidity. Liquidity is again a price magnet. I don't want to repeat it again. I hope you guys understand by now. But basically, what you are now looking at is if you follow the structure, you want a structure break around here, and then you short it because this break would confirm a rotation to this low, and breaking this low would confirm a rotation to this low, and breaking this low would confirm a rotation to this main low around here. It's kind of like the domino effect of market structure. And if we now go like to the low time frames, you guys can see that. Let's just drop it over here. But this high wasn't like the cleanest. It was New York. We got the New York push up, and technically, yeah, You could short around here, but in my opinion, I didn't see like too much. Like first of all, we just have been SOPing the low, and secondly, I mean, well, okay, we had a break here, but for me, it wasn't clean. Yes, you could have taken it, but in the moment, taking this high was way too risky for me. So I'm not going to say like, oh yeah, it worked. I mean, of course it worked, but like I got all like every direction I got it right. But if I don't have my true confirmation, I'm not going to be like the guy and say, yeah, I told you guys so. No, like we didn't get the proper confirmation, so it is what it is. So yeah, basically price has now dumped lower, and now I want to go over the next trade that I shared on my X, and basically I was this supply. Wait, first of all, let me remove this. Let's remove all of this to be honest. Okay, and the next trade was the supply. My mistake was here that I was hoping for this refined supply, but it was actually like valid to limit this supply, and I'm not sure where my limit was, like where it would have been. Maybe above this high. I gotta check. Yes, 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 yes. So it's a it's a huge stop loss. I know it's like a one risk to reward, but this trade was well to take. I mean, of course you could have taken it to the low at this point. But what my problem is, I mean, first of all, like taking these low RR trades is not the greatest thing you can do, but it is completely valid because if you take a trade that is like extremely high probability, like why not take it? Like why not take those extra few bucks? If the win rate is around 80%, like it only has to be above 50% for a 1 hour trade to work. Like if you get a coin and every time you flip heads, like it flipping heads flipping heads has a 51% chance of happening. Of course, you would flip the coin 1,000 times and then profit of this 1% difference that you get every time. And that was kind of my mistake that I didn't really take it. I'm not like the biggest fan of limit orders, but I have to get like more familiar with it and like just do it like because other people say yeah a 1.5R is not great. I mean who cares, bro? If I put 10K in this trade, it has a 80% win rate, bro. I'm going to take it every day of the week. If you guys feel me, so that was like the first fumble that I had, and I mean I can show you guys it as well. Mm. I was looking for this refined supply up here. That way never ended up hitting, but yeah, basically this trade was completely valid to take. Of course, I wouldn't go in with my full position. That's like kind of retarded. But let's say I'm putting in 50% of my position, original position around here. And if we end up like moving higher, hitting this refined supply, you could trail your stop loss from this high all the way down to this refined one. And then you can add your risk back, plus you can add the risk that you plan to enter on this trade originally. So it's kind of like a win-win trade. And yeah, and that's basically it. Like, was high probability also like from a statistical perspective, the weekly high was already in. Yeah, it was put in on Monday, and everything was pointing lower. As you guys can see, we're instantly dumped lower, and yeah, that's basically the end of the story. But the funny thing is that basically the same thing happened the next day. Or was the next day? Yeah, it was the next day. Again, I was waiting for the refined supply. That was backed by the POC, I think. Yeah, it should be. But as you guys know, I was waiting for this refined supply. But what did it do? It just mitigated this bigger supply and ended up taking the main low. So yeah, like just from June 16th to now, you could have taken like 1, 2, 3 really nice trades. Here you're trading with the trend. We're clearly trending down. I mean, like, sorry guys. Like after breaking this low and reconfirming it around here, we're clearly trending to the downside. So, I mean, I'm not going to go over why I expected this trade to work. Like, you can go back to my X, but if I do it quickly, we barely SFP this low. Like the wick was so tiny, and most of the times when the wick is so tiny, there's like a 99% that the wick gets taken out because there are a lot of orders resting below this low, and that's exactly what happened. That's why I was looking for this trade. But yeah, um, that's basically what happened, and now I think it's one, yeah, basically it's two more trades that I was looking at, and again I only ended up taking. No, I actually ended up taking those two, but on a different coin. So let me just mark out the POIs. Let's go to a low time frame, and you guys can go to my X and basically like filter the trades by date, and then you guys are going to see that everything was shed on my X. It's just that I was always looking for the either the refined supply or I was looking for a reconfirmation trade. That means like the price mitigates the supply and then breaks this structure, and then we look to enter around here. But in two cases that did not happen, so that was like kind of unfortunate for us. Man, what is this annoying stuff? Mm, let's go to the 30-second structure here. As you guys can see, we had an overlapping structure supply around here. I shared this on my X as well. Like you can check everything. Like this is not hindsight. I said this before, and trading is real. Like a lot of people are doing like the fake stuff. They're posting like 10 different charts, and when one thing works, they're going to be like, "Oh yeah, I called it," but nah, that's not the case here. So basically, the next trade I was looking at was around this was either around this refined supply or up here around this supply. Let me make it like darker. And if I guys, if I fast forward, why it's so slow? Not transfer. This takes way too long. Basically, we had this POI mapped out. If the chart starts loading, hello? Okay, really don't know what's going on today, but basically the trade was around here, and the reason I was looking for this trade was because, as you guys hopefully know by now, liquidity, liquidity, liquidity. So there was nothing but sell side liquidity, and we all love our ranges, and Bro, what the fuck is going on? Excuse me, guys. Okay, basically we had our POI mapped out, and as you guys know, I mean, if you want the explanation video about range deviations, I'm going to do it, but um, I think most of you guys already know it. But basically what happened here was that we deviated this range high, and for range deviation, you look for a low time frame break that closes back inside the range, and then we're expecting a rotation back to the range low. And in this case, because there was only sell side, you would take the trade even lower to this point. But what was like a really nice confluence was that our overlapping structural supply was around here, so there was our rejection POI, and now what we just need is like our entry confirmation. And if I drop to the 1 minute, I think it was even a 2 minute structure break, but right, let's 2 minute or 3 minute even. Yeah, it was even 3 minute almost. Wait, and let's continue. Okay, here it was. So basically, you wouldn't really enter around here because we still had our demand. So that's you always have to be cautious when you got like demand right below your structure break, and the real entry would have been around here. And in this case, we create supply, but I probably would put it above this high. And I mean, the rest is kind of simple. Like you take the entry here and you just target the low. So for 6.8 error, and I didn't take this trade. However, I took this arbitrate, this eighth, oh, I don't know, swap. Oh, yeah. Wait, let me delete this. So yeah, my entry was kind of late because I mean, I mean it was funny because it was like a side terrain, and I mean, bro, I'm just yapping. Fuck it. Nobody wants to hear. If you want to hear it, sorry, like just comment. But basically, what I was looking at it was really simple. Bitcoin hit the short POI, and Bitcoin was like it was super clean, like it was one of the cleanest trades in a while. You guys can see all this liquidity. Like, look at this. This trade was so insane. Unfortunately, because I was outside, I wasn't at the break. But after price ended up grabbing this extreme liquidity and Bitcoin was hitting its short POI, I was looking to short. If I was right at the chart, I would have shorted here for a clean 18 hour, but I got there later, so I shorted later. And basically, since that, I mean, this was a long trade that got stopped around break even. But basically, yeah, but basically, this was the trade that I took. But again, instead of Bitcoin, like I took this one, but both trades were well to take. So yeah, this was the short that you could have taken, and I want to go over like the final trade and the final smart like SMC trade, and that was around this low. Because like we swept all the sales at liquidity, I was kind of expecting or looking for a big wick to then long price to the upside, and that's basically what we got. Price really clean, like we had a lot of sales at liquidity stacked again. And how does this work? Like institutions like purposefully stack the sales at liquidity, like they let retail place their stop losses below each of those lows, and they do that because if they stop these longs out, like the intention of the market makers is to go long, like they want to go long, but they can't just click buy because their buy positions are like way too large. If they would go and just press on the market order, buy order, like price would, I don't know, price would nuke to the upside. Basically, a 1 minute candle would maybe even gap to the upside, and they would get filled like really badly. And because their goal is to maximize all the profits, they have to like trap retail to give their long positions to them. Because every long position that is gets stopped out is a sell market order. And for every seller, there has to be a buyer. So who's the buyer? Of course, the market maker. Who bought here? The market maker bought here, here, here. And that's basically where they filled their long positions. And I was also looking for a long run there. Um, and the first trade that you could have taken, I wasn't awake, but if you were awake, this was kind of like late Asia. The first trade that, uh, where was it? 1 hour, 2 hour? Or maybe there wasn't even a clean one. Yeah, it was. Wait. Okay, it's not the best. I mean, I'm looking if there was like a second entry. Um, you're like looking for a break around here. You could have technically, yeah, here was the trade. Like when we like it's the same theory again, a range deviation. Here we deviate the range and we're looking for a low time frame structure break. And here it's the same. Deviation, look for a low time frame structure break. If we drop to the 10, no, oh, is it? No, yeah, it is. But you guys can see that we got two candles down, two candles or three candles up, two candles down, and this is basically our structure break. So technically, you could have taken this trade, but your stop loss below this low. It's not the most beautiful trade, to be honest, but it was valid to take. And then you just target this high, and you can even leave a runner like to higher levels. Like I would leave a runner to run this supply, and just see how price develops. So this was kind of the first long that you could have taken, and I want to go over the longs that I took, and um, basically there were two long trades. Nice. I lost one, and the second, I'm currently in the second one, but I just want to explain how I entered these trades, and it was quite simple because when market breaks, we, I mean, basically always, but like 99% of the times we get a pullback, and I was looking like I told you guys, our main structure. This looks like shit. Main structure, and then you look for the level 2 structure break, and then go long from here. Then again long to the high. And I was basically looking for this demand around this low. Let me just clean this up. I was looking for this demand, and there was even refined structure demand. Or was there? Wait, I already forgot the shit. Um, but yeah, no, it was here. It was around here. Yes. So the first trade that I took was basically the structure break, and I ended up getting stopped out after like my long trade was around here. My stop loss was around this low, and I went long after structure break, but um, price of course ended up going lower, but that's fine. And then what I saw next, we kind of had like a low time frame Wyckoff model 1 accumulation. Like here's our tab 1, here's tab 2, tab 3, and then we broke structure. And I mean, you could have just entered here, but I was like thinking, why not put a limit order? Because we have like this really clean. Wait, well, where was it around here? why not put the limit order here? Because we have like this really clean inefficiency in the low time frame. So that's basically what I did. I put my limit around here. And then I'm currently targeting this high for my TP1. I mean, I can also go over it quickly. I mean, my entry is like 573, and this low was, I mean, it was, wait, 573. Oh yeah, this was like my entry, and yeah, that's basically where price ended up reacting from, and I'm expecting my TP to get taken. So, I mean, quite simple trades. And if we now go back and count like how much you could have made, it's really a lot. Like you only would have taken this one loss. And here it's 2%. Here it's, I mean, like, let's say we only enter like half our position. So here I would kind of say like 1%. So 3%. Here 1% again. So it's 4%. Here we go full position. 4% plus 7, 11%. Then let's say we did, because I didn't take it because I was a sleeper. 11% minus 1, 10%, plus, if this TP hits, plus 8%, 18%. So, and this entire range from, yeah, basically from here until here, you could have made 18%. I mean, you probably could have made even more, but like just taking the simple trades, you could have made 18%. 18%. Bro, that's so. In 2 weeks. 80% in 2 weeks, guys. 18%. That's so fucking much. And the trades, like, it's not difficult. Like, what do you have to do here? To show the brush break. Wow, wow, nice, nice, nice. What do you do here? You limit the supply because you know we're going trending low. Wow. What do you do here? You do the same. Wow, nice. What do you do here? Range deviation. Whoa, nice. What do you do here? Range deviation. Okay, you take a little L, but then like, of course, your psychology has to be ready. Like, just because I took the L, I'm not going to be like, oh no, shit, I took the L. I'm going to wait for this low. Nah, hell nah, bro. Like, stick to your strategy. What happened? Like, it's actually, this is a perfect example. You guys can see I was just too early. Like, the market wants to mitigate the supply first, accumulate more, and then we pump. Like, it's the same trade basically. It's the same fucking trade. I mean, here we even had like this low time for supply, but nobody cares because we had this accumulation. This accumulation stronger. Like we, you shouldn't get trapped by these small things. If our expectations to go higher, like we had this massive SFP, like how there so many longs got filled around here. Our expectation is a rotation to the high. You're looking for longs and discount, and here it's basically extreme discount. Yeah, basically that's it. Like you just have to take trades and then 80%, 2 weeks, 15 days. I mean, okay, let's say 16 days until it hits NTP, what I'm expecting to do. But yeah, that's it. I mean, it's not difficult, guys. I think everyone can do it, and also you don't have to be present like all the time. How trading works is basically like you put your alert here, and then like you just have to be on your phone or your PC to take the trade. You enter, take trade. Here, basically you limit order and you put your alert here, like in case we move higher. Here you do the same, and that's it to be honest. I mean, of course it can be that, I don't know, let's say you're on vacation. I mean, vacation is a big example, but let's say you're sleeping alone around here. It's fine, okay? It happens. Then you just take the next trade. So, but yeah, I just want to show you guys what was possible on the range. Kind of like just taking safe trades. Of course, you could have scalped like this. That was like some low time frame wake up frontier. But just taking these safe trades, like it's quite simple. So I hope you guys learned something today. I hope I was not yapping too much, and I see you guys in the next one. Goodbye.